Well, where are we right now? We're in bad shape. Not the U.S., the whole global economy. But for the last couple of weeks, it was a big U.S. problem, but over the last 4 or 5 days, Europe now is just as bad shape. It's called Schadenfreude, getting pleasure out of someone else's grief. There was lots of Schadenfreude in Europe last week and a week before as they watched our turmoil here in the U.S. You know, well, that'll teach those Americans. Now it's reversed. Now we're looking at them and saying, sure, you're right. Chicken's coming home to roost. The average stock prices in Europe have declined between 40 and 50%. Anybody know what they've done here in the U.S.? Well, the target's still moving, but 20-some%, maybe 25%, the markets are down. Well, Europe is pushing double that. Central governments across the planet are trying to stem problems in their countries. I see that Egypt pumped $15 billion into its economy trying to prop up its banking system. And Iceland, did you hear? Iceland is on the verge of bankruptcy. What's going on there? It's everywhere. It's not just a U.S. problem now. And that tells you how interconnected world financial markets are. Congress, dilly-dally around, and the fire gets even bigger. Well, let's see. So where are we here? Have you noticed you're not being bothered on television by leasing commercials anymore? You can't lease a car anymore. Leases are gone. There's no more leasing. And try to borrow money to buy a car. See how fun that is. Almost impossible to buy a car now with a loan because you can't get a loan. You have to have an 850 credit score or know somebody or something. Now, what do you think that's going to do here in the U.S.? No more cars. You think Michigan's in trouble? You think the Great Lakes states are in trouble?
Our dependence on foreign oil land.
Sure. Well, yeah. Gasoline prices are falling. None of us can drive anymore. Right? Oh, bad news for Michigan. If there's any good news, we've been in a recession for 3 years or depression for 3 years in Michigan. We're hardened off. We know how to take it. The rest of the U.S. is not hardened off. They're going to learn, right? Oh, the auto industry is in bad shape right now. Really. No one is buying cars, at least not in the U.S. And I suspect the rest of the world will suffer some big declines in auto sales also. I was talking with a guy who's trying to do a mortgage. He has an 850 credit score. Oh, perfect. And he was into his 5th week of arguing with the bank about a mortgage. And he made a 25% down payment, 850 credit score. They still wouldn't lend him money. He said every week, 10 days, they'd call him up with something else. I said, what do you mean? He said, well, they just called me up and said, how come Barclays Bank checked your credit score last week? And his response was, who? Barclays Bank. Never heard of them. Well, why'd they check your credit score? I don't know. I've never heard of them. Don't tell me that. I don't know. And the bank wanted an answer. And he said every week they come up with some little question like that. It could have been he applied for auto insurance or some other type of insurance, and they got all the way back to Barclays. It might have been involved as the insurance company. I don't know. But he figures it'll take 2 months before he gets his money. And he's perfect. He's perfect. No more mortgages, right? You get that idea? I asked the local banker here in Grand Rapids, I said, give me an example of what we're seeing here in Grand Rapids that's bad. And he said, I've got a good example for you, Greg. He said, you know what an EDC is? I said, yes, an Economic Development Corporation. These are public entities set up to issue tax-free muni bonds. They get that money, then loan the money out to businesses in the area or to businesses thinking about coming into the area to expand or build their facilities. Businesses like it. It's a heck of a fringe benefit. They get tax-free money. They get to pay 3% maybe instead of 6 or 8. It's quite an incentive. He said, well, most of this year, the interest rate on these tax-free bonds was running about 2.6%. He said, that's normal. He said in the last 2 weeks it's jumped up to 8.6. Can't do them anymore. That's too expensive. Nobody will do that. So it's the end of economic development bonds for a while. Banks don't trust each other anymore. Banks loan trillions of dollars overnight to each other every day. Some banks, rural banks, small banks, have an excess of reserves against their deposits, more reserves than they need. Large, big city banks usually run a deficit. The Federal Reserve actually runs the system where the banks with too many reserves can loan them to the banks with insufficient reserves, and trillions go back and forth all the time. This helps banks. It helps them either earn interest or it helps them with their liquidity problems. Banks aren't trusting anybody anymore. They don't know if I lend you money overnight, will you declare bankruptcy tonight? So that's come to a halt. The commercial paper market has ground to a halt. This is a horrible development. There are billions of dollars of commercial paper issued every week, tens of billions. These are short-term corporate IOUs, and they use them for financing inventory. And when that market, which is now dried up, doesn't exist, when that market shuts down, American businesses shut down. It carried to its extreme. We're not quite there, but we're seeing evidence. Walmart, Target, big companies aren't going to be able to borrow money to build up their Christmas inventory. I don't think it'll get that bad, but that's where we are right now. Well, I've convinced you it's bad, right? Experts describe it as credit markets have seized up. In other words, credit has quit flowing globally. And it's already done that long enough. We are guaranteed a recession. I think you're hearing that from everybody. There is going to be a recession. What we don't know is how bad it will be, whether it will be just another recession. I doubt that. Or whether it will be a severe recession. I've kind of been fearful of that. And how long it will last. Since the end of World War II, the average recession has lasted 11 months. Short. Does that surprise you? 11 months. I don't see how that's possible this time. To me, I'd say 2 to 3 years. Either we're going to be in a recession or business growth, GDP growth will be so slow that it will feel like a recession. 2 to 3 years of bad across the U.S. And then I would expect several more years of not very good GDP growth and not very good returns in the stock market. The reason I say that is because all of us in here benefited from the housing bubble, whether we borrowed $1 or not. How we benefited was the economy was goosed by all the money being pumped into it, all the credit for all of us to buy vehicles, to do mortgages, to do home equity loans, you name it. And that added at least 1% to our economic growth per year. That shouldn't have really been there. And now we're adjusting. So if you said, well, that 1% won't be there in the future, we've learned our lesson. Okay, knock 1% off per year. And the growth over the last handful of years hasn't been that great, period. I don't think we're going to have high GDP like the good old 90s when we were going up 4 or 5% a year. I don't think we're going to see that for a long time. I hope I'm wrong. I don't have a crystal ball. This is just my gut feeling. All I know is that statement, he who lives by the crystal ball soon learns what it's like to eat ground glass. So, just my feeling. I can't predict the future.